Did September actually save the 2024 real estate market? Let's talk about that this week at Simply Des Moines Market Values. An unexpected thing kind of started to occur here this last couple of weeks. We started to catch up with our closed sales year to date. And so that prompted me to really take a closer look at where we are with our closed sales and uh, the factors that brought us to this point here. So let's jump right in here to the show and kind of see what we're talking about here. The numbers of number of closed sales as of today, December 22nd here, we're setting currently at 12,990 homes closed. And that's about 253 sales away from our 13,243 that we did last year. It's still going to be close because you would think, well, that's pretty easy to do within the next week or so as far as closings with year-end closings. But we've got really a holiday week with Christmas being on a Wednesday this year. It's going to kind of probably delay a lot of data entry. We may actually hit that number, but it will. Again, we're looking at December 31st of last year. So we have from today until basically through a week from Wednesday to hit that 13,243 number. And I think there's some possibilities that we're going to do that, but let's kind of talk a little bit about how we calculate that number and where we're at and some things I discovered here. We hit that 12,000 milestone, as you can see right here, um, at taking only 23 days this year to hit from 11,000 to 12,000. A year ago, it took us 34 days, over a full month to do that. So it's about a third faster timing this year. And we did that on November 22nd. So, if we're thinking we're going to hit 13,000, probably on Monday. If we're only 10 or so away, we're going to probably hit that on Monday of this coming week. Maybe Tuesday. It just depends again on the activity. But we still have, like I said, about a little over a week to close into that 13,000 and hit the number that we did last year. So the pace is definitely faster this year, and some of that has to do, well, a lot of that has to do with the market activity we've seen this fall. We'll talk about that here in a minute here. So this is a graphic that's really not a graphic. It's the actual spreadsheet that I use for me to keep track of where we're hitting these numbers. And again, right down here at the bottom, there's that 13,243, and we're currently at 12,990. If you look across the board here, 23 days is not an uncommon number for us to hit that 12,000 number. The first time we hit 12,000 closed sales was back in 2015. And prior to that, where it's gray, we just never had hit that. In fact, going back to, it's kind of interesting looking back here in 2011, we hadn't even hit 8,000 closed sales year to date in 2010 and 2011. So we're definitely with some market increases of adding maybe some more market areas and more agents going out a little bit more. We're seeing activity pick up just generally over the last decade here. So, but that again is the 23 days there. If you kind of zoom in here again, you can see 34 days last year for us to hit that 13,000. Cross over to the 13,000 line. It took us 31 days last year. Well, November, what was our date? I think the 20th or 22nd there. Then that means that we are really well within the realm of possibility to hit 13,000. So how does that look on dates here? Yeah, there's 11/22. This is the same graphic or same Excel spreadsheet that I use to populate the graphics that I produce. I basically record the date that we hit that, and then it calculates the number of days out. So we should be on track to hit that 13,000. We just did it barely last year on November 28th, and so I've got confidence that we're going to do that. Even though the sale pendings are down, There's a lot of homes in the pending process that are probably trying to get closed before year end. So that's going to be kind of the race we're going to be on. So there's those two sections kind of enlarged there. As far as what's causing the market to be increased this last fall, a lot of it had to do with the Federal Reserve, or maybe not the Federal Reserve. We look back, this is going back to January of 2022, so it goes back a full 3 years. Just this past year, we started hearing a lot of talk about the Fed, talking about them going to start cutting interest rates. And I think, we talked about this in previous shows where this period of time right here was where rates started going down. This is the 30-year fixed average mortgage interest rate from Freddie Mac. Interest rates started going down as they started talking about that. But then what you've noticed here is every time rates come down, we've seen mortgage interest rates, the Federal Reserve rate comes down, we've seen mortgage interest rates go back up. So without fail, here this last week, the Federal Reserve dropped the rate another quarter. And true to form, we've seen mortgage interest rates going up. This is predominantly based on fear of the economy and fear of inflation moving into the first part of 2025. So, um, what we're seeing here is, the question is, really, did September save the real estate market for this year? And actually, if you really start to go back and you start to look here, mortgage interest rates really started to drop beginning back in May. So if we look back here in this boxed area here, this is where mortgage interest rates were probably the highest back in May of earlier this year. But you can see that we've kind of got a downward trend here happening. We had a little bit of a bump up in June and a little bit again in July, but not very much when you look at the overall picture here. We've seen rates drop all the way down, and this is the month of September where we really got close to that 6% interest rate. And I think that excited a lot of home buyers and a lot of homeowners sitting out there on the sidelines waiting to list their homes. And this is, we've been kind of giving a lot of credit here to September. In fact, I've talked a lot about how September was kind of that magic month, but really we've seen rates drop comparatively since the month of May. Now, if you look at last year's numbers, so we're now focusing on these little dashes here. We were kind of the opposite effect here as we went into the market a year ago from May until early November. And that November date was when we hit that high almost into that 8% range before it started to drop back down. So again, I think it's really credit belongs to from May through the end of September that gave us those increase in activity. So looking at the number of homes, this is the inventory of homes. This is actually the numbers of homes that were actually on the market during each week period here compared to the mortgage rates. We're going to look at the number of homes added each week, the new listings here in a second. But you can kind of see that as interest rates began to come down, again from that May point on, we actually started to see the inventory start to build where homeowners kind of felt like, this is a good time to be in the marketplace. It's non-traditional because it's typically in the spring market. We like to see more activity and more listings. But the listing inventory really started to build as we went into the fall market. And typically what we see is the number of homes for sale kind of peak out around that October, early November period. But we've actually seen November, actually, we had a little burst of activity again. And that was kind of, when you see these rates kind of drop a little bit, I think what that tells us is that home buyers are feeling, and home sellers also are feeling the movement of the mortgage rates. And when we start to see mortgage rates come down and they start to hear that they're coming down, they're reacting, which tells me that the marketplace is primed. It's ready for buyer activity, and buyers are basically just sitting here waiting for the right timing to come on the market. So where we're really at here is at the end of December. We've got one more week to come on here. We're at about close to 800 to 1,000, maybe 800 more homes on the market than we had at this same time last year. We were under 3,000 as we started the year, and we're going to be just under 3,600 here as we move into the end of this year. So that's going to really prime the pump for 2025 new homes or new home buyers out there in the marketplace. So if we look at this same mortgage interest rate trend and we now apply the weekly listings added, so this is the number of homes that are basically coming on the market each week, which is a little better view. Again, you can see back in May, the activity was pretty strong. In fact, it was very, very strong as we moved into the fall. We, typically don't see this kind this kind of listing activity come on the market, and most of these were bought up and transferred into pendings, which we'll see here in another second. But as we got toward November, when rates really started to rise again, you can see the direct impact here. Of course, this week right here was Thanksgiving, even though it's showing over December. My numbers are kind of off a little bit here at the bottom, but you can see that as we hit December, the number of homes coming on the market is as traditional, really, are coming down. But we've had really several weeks here where we've seen a lower pace of homes coming on the market. Now, as far as sale pendings go, these are the number of weekly pendings offers accepted. So again, like for the first week of January, we had a little over 600 homes went under contract. We were slow the beginning of this year because of all the heavy snow we had. That kind of compressed the spring market and gave it a little bit of a jump. But sale pendings were fairly steady. I mean, they were on the same kind of downward trajectory, but until we hit that October mark here, it's where we really started to see the sale pending start to drop off a little bit. So the big talk really most of this year, and I think the biggest factor involved here is the buying power. And you can see really anytime we've seen this number or this bar chart here above the dash lines, that means that more buyers had greater buying power than they did the previous year. In fact, they had the best buying power for the most part of the year because where interest rates were from again from about that August through November period here. In fact, we're pretty close to where we had for buying power back in January, early January, because the rates are pretty close to where they were back then. Rates did go up this past week. We're at 6.72%, and that dropped us a little bit behind last year. I think the fact that we have a holiday in the middle of a week, two holidays in 2 weeks in the middle of a week, are probably going to change the market just a little bit. Whereas maybe if the holiday was at the first or over the weekend, business would maybe continue to happen a little bit differently. But anyway, the affordability, like I say, were highest from October to November. So that's really the show this week. I just wanted to thank everybody. It's week 51. I hope you all have a very, very Merry Christmas and Happy New Year. Stay safe during the holidays. And as always, thank you all for watching. I do appreciate you tuning in every week. And as I always ask, please hit that share button, the subscribe button. And when you do subscribe, hit that notification bell, and that'll help this channel grow. We've currently recorded just over 280 shows since I started this back in 2020. So, I'd be trying to work toward my 300th show here sometime in early 2025. So thanks again, everybody. Be safe out there and enjoy your holidays and time with your friends and family.